Okay, now we can see the accounting equation. Accounting equation is resources are equals to the sources. Mean what is the equal? The amount. Yeah, the amount. The amount of resources will be equal with sources. The resources are called asset. So all the resources owned by the company is called assets. And asset will be from either liabilities or owner's equity. And the assets usually will be supplied by liabilities from creditors and investment by the owners. Okay, so let us see an example of the transaction that should be recorded. As we see in here, number one, Chris Clark deposit $25,000 in a bank account for Net Solutions. So in here, Chris Clark start her business called Net Solution. And for the first steps, she deposited her money to the company 25,000. So how we record in accounting by using accounting equation, we are going to record in assets side. So we are going to add cash 25,000 in the asset side. What is the asset, the cash from owner? So we are going also to record Chris Clark capital 25,000 on the owner's equity side. All right, the next one is Net Solution. The company buys land for 20,000. The company has already had $25,000 for starting the business, and the owner by using the company's cash buy land. Yeah, so we are going to record land in the asset side. And in order to buy land, we are going to deduct the cash. So land will be increased 20,000, will be added 20,000, and cash will be deducted 20,000. Since no liabilities and owner's equity involved in this transaction, we are not going to record it on liability side or owner's equity side. Okay, so we deduct our cash 20,000 and add land as asset in here 20,000. Okay, the next one, the third transaction is Net Solutions buy supplies for $1,350 and agree to pay supplier later. So means we have the supplies 1,350 from liability. So we are going to record accounts payable 1,350. Okay, so this is from liability. Our asset increased because of liability. So that is why we increase our liabilities in here. The next one is after running the business for a while, Net Solution earns fees for 7,500 and she received by cash. Yeah. So in here we are going to record cash will be increased 7,500, and then the cash increase because of what? Because of fees earned. So means we are going to increase owner's equity in here, and we are going to add fees earned on the owner's equity side. Okay, the next transaction. Net Solution paid wages, rent, utilities, and miscellaneous expense. So all the expense later will deduct owner's equity side. Yeah. So in here, when we pay these expenses, we are going to deduct cash. Yeah, the total is 3,350. And then for what? We use the money to pay expenses. Expenses will deduct owner's equity side. And then the next one, Net Solution pays $950 to creditors on account. Yeah, so the liabilities in here is paid by the companies. Oh, of course, we are going to deduct cash for paying our liabilities. We deduct cash 950, we deduct liabilities 950. Okay, the next one, at the end of the month, the cost of supplies on hand is 550. For the first time we buy, supplies was 1,350. Because of usage at the end, we estimate only 550 left. So it means we have already used about 800 of supplies. Yeah, so we deduct our supplies because of usage. And of course, this one will be considered as expenses, and all expenses will deduct the owner's equity. Okay, the next one is Chris withdraw money from the company for $2,000. Of course, in here, our cash will be, the company's cash will be deducted for 2,000, and the deduction will also deduct owner's equity. So we are going to record it as Chris Clark drawing 2,000. So at the end of one period, we are going to see the balance of all the assets. Cash 5,900 left, supplies 550, and then we have land worth 20,000. And all of the assets are from liabilities plus owner's equity. How much liability we have at the end period? 400. Why? Because we have already paid 950. Yeah. And then owner's equity is, we can see in here, owner's equity items in investment, initial investment by the owners, 25,000. And then Chris also withdraw money, 2,000. Of course, we are going to deduct the equity of the owner. And then we have fees earned, 7,500. And then the company paid wage, rent, supplies, utilities, and miscellaneous expense. So yeah, all the expense will deduct owner's equity as well as drawing. However, fees earned will add the owner's equity. Okay, so the effect of the transaction. Okay, the effect of this transaction, we can prepare the financial statements. Okay, before we prepare the financial statements, we can see the effect of the transaction to owner's equity. Owner's equity will be decreased by owner's withdrawal and expenses, and owner's equity will be increased by owner's investment and revenue. Okay, so that is why we can see just now the additional and the deduction of the owner's equity. And the difference between revenue and expenses will generate net income. Yeah, total revenue minus total expenses will be net income. Okay, let us see the financial statements. There are at least 4 main financial statements that we should prepare in accounting. First one is income statement. Second one, statement of changes in equity. Third one, statement of financial position, or also called balance sheet. And then the number 4, cash flow statements. Income statement, by preparing income statement, we can see whether a business produce or generate net profit or not. So if you want to see whether a business has profit or not, we can see it from income statement. And then the next one, the second one, statement of changes in equity, is the financial statement that show the position of the owner investment. We can see in statement of change in equity, the increase and decrease of the equity for one period. And then the third one, statement of financial position, also called balance sheet, is the information that provide position of the company's financial. Yeah, the company's assets, liabilities, and owner's equity can be seen in balance sheet or statement of financial position. If you want to see the condition of company's cash, we can see it from cash flow statement, where the money from. In balance sheet, we can see the balance of the cash, but not the source and usage of the cash itself. So in cash flow statement, we can see the source of the cash and the usage of the cash. Okay, so this is the income statement for net solution based on the record that we have already did just now for net solutions. Okay, so for financial statements, don't forget we have to have the title first. The title, net solution, the company name first, and then the name of the statements, net solution, income statement, and don't forget the period for the month ended November 30th, 2002, for example, in here. Okay, so once we have already prepared the title, and then now we need to produce the information itself for the income statement. In income statement, we are going to deduct total revenue with total expenses in order to generate net income. However, in here, only one fees earned, 7,500, will be deducted with the expenses. As we recorded just now, expenses that have been paid by Chris are wages expenses 2,125, rent expense 800, supplies expense 800, utilities expense, miscellaneous expense, and the total expenses are 4,450. When we deduct total revenue with the total expenses, we get $3,050. So means net solutions, net solution managed by Chris Clark generate revenue in this month for generate net income for this month for 3,050. So this is a good business because we can generate net income or profit. Okay, so this is the steps. Yeah. Step one, we provide fees earned. Second one, we provide expenses. One, we are going to deduct and then get the net profit. And the net profit or net income will be later used in order to be reported in statement of change in equity. So the 3,050 will be reported in here. Okay, the steps in preparing financial statements: first, income statement; second, statement of owner's equity. So as we see in here, don't forget, we have to put the title, the company name first, the name of the financial statements is statement of owner's equity, and the date for the month ended November 30th, 2002, for example, in here. Okay, so Chris Clark, the investment by Chris Clark in November 1st, at the beginning, no balance of Chris Clark capital, and then investment that she did at the beginning of the business is 25,000, and then from the period she got net income 3,050, and then we are going to deduct with withdrawals, so we can see the owner's equity at the end is 26,050. Okay, first this is the steps. And then again, the balance of Chris Clark capital at the end of period will be also used in order to prepare the next financial statements called balance sheet or statement of financial position. So Chris Clark capital 26,050 will be used in order to be reported in balance sheet. And again, we have to put the title first, net solution, balance sheet, the date November 30th, 2002. As we see in here, assets, cash, supplies, land, total asset is 26,450. And on the liability side, we have accounts payable 100 and Chris Clark 26,050. When we compare, total assets should be equal with total liability plus owner's equity. So we can see in here total assets are 26,450. Total liability plus owner's equity is also 26,450. Okay, this is total assets will be equals to total liability plus owner's equity. Okay, the last one is statements of cash flow. In statement of cash flow, we can see where the money from and to what activity that we use the cash. So we can see in here, we have to divide it. We have to divide cash flow into three activities: operating activities, investing activities, financing activities. Operating activities related to receive money from revenue and pay expenses. Investing activities related to investment that the company conduct. Yeah, and then the third one, financing activities related to investment. Okay, we can see in here from operating activities, cash received from customer, 7,500, and we pay expenses 4,600. So we can see the balance from operating activities is 2,900. Okay, from investing activities, the money is used to pay land purchase, so we have to deduct 20,000. And then cash received from investor, Chris, 25,000, and she withdraw 2,000, so it will 23,000 left. So when we add all this 2,900 minus 20,000 plus 23,000, it is equals to 5,900, and 5,900 is same with the balance sheet amount, yeah, 5,900. Okay, so this is the way we prepare financial statements. Okay, there is a ratio needed to be used by manager later. Liability ratio of liabilities to owner's equity. Total liabilities divided by total owner's equity. Okay, so in this information that we had just now, total liabilities is 400. Total equity is 16,050. So we have 2.5%. Okay, the good percentage is total liability should be not more than total owner's equity. Yeah. Okay, so this is our resume. Sorry. Okay, so in accounting, we are going to do first is identify users, whether internal users or external users, and then identify their needs. Based on the needs, we are going to design the accounting system in order to be used to record economic data or called transaction in order to prepare the reports. The reports will be used by a user. Okay, this is another example that we can see. Mr. Ahmad started a business with cash 5,000, so cash will be added, increased, the arrow increased from owner's equity, so capital increase in here, and then took a bank loan 8,000, so means asset will be also increased by 8,000 from liabilities, bank loan. Okay, now the company's cash become 13,000. From 5,000 is from owners, another 8,000 from bank loan. So we report it as liability. And then the third one, purchase motorcycle for 2,000. Okay, so where the third transaction will deduct our cash for 2,000. So 13,000 minus 2,000, the cash will be reduced for 2,000. However, total asset is still 13,000, but 11,000 for cash, 2,000 in motor vehicle. And the capital is still the same, 5,000, and liability is 8,000. So we can see in here, total asset is still equal to total owner's equity plus liability. Then purchase trading goods for 1,000. So mean goods will be increased for 1,000, cash will be decreased 1,000. The total of asset is still 13,000. However, in asset we have cash, motor vehicle, and goods. Okay, and then sold goods of costing 500 in 800 means we the goods worth 500 was sold for 800. Okay, so we can see in here cash will be increased 800, goods will be decreased for 800. Yeah, and then since we sell more than the cost, we get profit for 300. Okay, and then when we pay salary, cash will be deducted, expenses will be increased and will be recorded in owner's equity to deduct owner's equity. Expenses will deduct owner's equity. So this is the next one, purchase furniture for 100 on credit. So we are going to see in here, furniture will be increased for 100 and also liabilities will increase for 100. Okay, and then so this is the result of the accounting equation based on the record conducted in the transaction. Okay,